Here in order to get through this topic. This topic and we chose this on purpose, Visa, MasterCard, Bitcoin, simply because it's a name people associate with Bitcoin, with cryptocurrencies, but really it's about a cryptocurrency discussion for the most part. And the application in the payments world, and especially when it comes to acceptance at the retail marketplace. So again, my name is Travis Delaney, Wildcard Consulting, and we were birthed out of Wildcard Systems that you might know that we're actually the innovators of prepaid open loop as we know it today, back in the day, some 20 years ago. So I'm going to go through our panel and do our introductions in lieu of the time element that we have. On our panel here, we have a mix of different individuals from different viewpoints to share some insight. At the end, we have Hendrik. Hendrik is with Alternet. He is an incubator with Alternet, and they are in support of the digital currency space, has background in mobile payments, in deep mobile payments for some years now. We have Chris DeRose. Chris is actually with Bitcoin Magazine. He's also a programmer by trade and understands the blockchain and the true details associated with cryptocurrency, most specifically Bitcoin. We have Peter Marr, and Peter Marr is actually the president of CoreCard, which is a prepaid processor out of Atlanta. So from a different perspective, from a processor, kind of a regulatory viewpoint, Peter has his opinions and perspectives. And then we have Stan. Stan here on the end, definitely last but not least. Stan has a unique viewpoint because he operates and supports a different cryptocurrency called VIN. It's probably something you have not heard about. I'll take a stab in the dark there. And so it is, for the layman's, it would be a closed loop type of a process that's green. It has a lot of different benefits to it. If we have time at the end, we can go into each of their backgrounds and their company structures, and we can take some of that offline. But in order to get to the topics at hand, we wanted to speed this along a little bit. So the first item that I think that I like to bring to the table and discuss, and there's a lot of, I'll call it elephants in the room when it comes to cryptocurrencies. And for those that were kind of keyed into the marketplace, there's some events that's been happening, every week for the most part. But over the weekend, we had a little bit of a dip in the Bitcoin arena. So there's this question about stability and all these different factors. But ultimately, it's about one item, and one item specifically that seems to come to mind. Every financial institution that I've ever spoken to, first question then has to do with regulatory control. So with that in mind, what I'd like us to do is talk about regulatory and security as it relates to regulatory and that topic, and how cryptocurrencies and for whether it be Bitcoin, VIN, or Litecoin, or anything else that you've heard in the line of a cryptocurrency, and how that will evolve and what the status is currently. So we can start with Stan.
Okay, well, I'm actually on the board of a group called DATA, which is the Digital Asset Transfer Authority, and this is a group that's been set up specifically to address the regulatory concerns around digital currencies like Bitcoin and VIN and Ripple, which are really the three major platforms. And I'd say the good news is that regulators have made it very clear in this country and in Europe as well that there is room for digital currency in the financial ecosystem, and they just want to see digital currencies effectively playing by the rules. So that means that personal identifying information and AML KYC considerations need to be incorporated into these new technologies. And there are various companies that are, I think, working to try to make that a reality, especially in the world of Bitcoin, where traditionally you would have an anonymous transaction that is still public. So what you're seeing are this kind of idea of gateways emerging, where you have companies that are acting responsibly to gather that information and then make a transaction quote unquote legitimate.
Hi, good morning. So processors often use the terminology agnostic, and they'll say, well, we're really agnostic to the rails by which we get the transaction. And that's probably still true in the case of core card. And so the traditional networks, your Visa, MasterCard, Discover, the processor really doesn't care how the transaction comes, and most processors act as a database of record. In the case of cryptocurrencies, bitcoins, the database of record is actually being accomplished through a blockchain. So there really isn't the need of the traditional processor. But in the case of issuer processors in prepaid, there's been a lot of interest of taking these currencies after the conversion and using a delivery mechanism of a prepaid card. And there's been some announcements, specifically in the United States. We've yet to see kind of the execution of that. I think it's coming, but there's a fair amount of regulatory concerns. So in our value chain, we've got program managers that own the P&L associated with a card. We've got processors, and we've got issuers. And any processor has to be respectful and mindful of the concerns of the issuers. So relative to the conversion of these currencies onto a prepaid card, in our case, there's a high amount of regulatory concern around source of funds, BSA, that type of thing. So there's more to that, but that will kind of kick it off.
So of the competencies that I have in Bitcoin, regulation is probably the least of them. However, I've been in Bitcoin for a while, and I've certainly seen the change in atmosphere from the early days to what we have now. And certainly you've all heard about the early days of Bitcoin with the extremists and the perhaps bad actors that were, for lack of a better word, controlling the system. In the current atmosphere, what we have is a lot of companies that are very well funded by reasonable people who want nothing more than to see this market regulated and work. The technology itself is completely agnostic to the intent of its actors. And so I think that there's a lot of room for regulation that will make everyone happy. And certainly I see this technology as imminent. And as such, it would be in regulators' best interest to start sooner than later. And I think that all of the rational actors in this system are in agreement on that term.
In our view, and we work with most of the digital assets or currencies in the world today, also in multiple multinational realms as well. And it's an interesting approach because if you see it from Western Europe or the US and Canada, they're trying to take the standardized approach that they have to any financial transaction regulation. If you start going outside of that realm, you'll see places like China that has forbidden the use of Bitcoin at all, or Russia this week as well, that has made it a criminal offense to even speak about Bitcoin as a currency. But in general terms, what we see is a trend towards addressing it more as a digital asset than a currency itself, and therefore tax regulated and managed as if it was an asset transfer between independent parties.
So, to summarize a little bit when we talk about regulatory, some of the questions that come up, and I've heard this asked numerous times, and it depends on who we're talking to, obviously, or who is asking the question, but a lot of time it has to do, well, is there anonymous transactions? Is there KYC? Do I really know source of funds? How do you answer those questions? And the real answer is there are two answers to that question. Understanding that you're in an evolutionary scale and there is a bell curve like any other industry as it goes through these growth stages, that in the beginning, at the raw base of what it is, there is complete autonomy, and there can be. But I think what Stan had mentioned is part of the infrastructure that's being built, and supported by companies like Alternet that are helping facilitate this. I refer to as a big Sims game, right? So it's in essence, there is a road, there's an infrastructure that is laid out there. And there's companies like Ripple that are providing an infrastructure, technical structure that can be utilized. And the whole idea is we're building businesses and structures around it that match the omni-channels that we see today to facilitate a better, faster, quicker type of environment. In the end, it's less cost, it's faster, it is the equivalent, in essence, to Peter's type of PayNet type of network, but it's not centrally controlled, it's decentralized. So then there's no one control, one person charging a toll to pass by that toll road, right? So the other topic that I want to address on, and it's really when we talk about cryptocurrencies in general, there's many uses for the blockchain. And the blockchain, I've always referred to it as this big P&L ledger in the sky, right? So if you think about it in its simplest terms, there's an ID, there's an input, there's an output, and there's a value. And so people have used that, and it can be the way it's structured to be used in many different ways. Now, that goes for any cryptocurrencies, and they each have a different model and structure of how they're doing. So there's different uses for them. They could be closed loop type of environments like the VEN. Ripple is wanting to be the, in essence, the ISO 8583 of the future for cryptocurrencies. They want to be the protocol that how to send it. Bitcoin is a B2C type of an environment with a wallet and a spend capability. But there's much more. The Internet of Things come into play. There's a lot of other capabilities from corporate movement of money, international cross-border remittance and transactions. There's so much capabilities. There's a replacement of SWIFT and any other network for that matter. But it is in the beginning stages. It has a capability. It has to be built. So we're really talking about the beginning of something at its early stages. And as I think Chris had mentioned, rational individuals are looking at how that can be applied in today's world. So with that thought in mind and how things can be used, what I'd like for the panel to do is kind of talk about use cases, if you will. Well, how would you use that? How would you use a VIN, Stan?
Well, so right now we're approaching about $500 million exchanged over the last 7 years. And there are really 3 areas where we kind of divide this into. One is consumer. So we have our first credit cards coming at the end of the year that will run on Visa and MasterCard rails. And so anybody who basically has that card would hold a VEN balance in the cloud, and then when they're at the retailer, it would transact from the digital currency balance into the local currency balance for the transaction. And that's interesting because the VEN is an asset-backed currency, and it's partially backed by carbon, so it basically makes it the first green or environmental currency in the world. And it means that anybody who's using VEN for their payments is basically creating an environmental benefit related to the transaction. So green credit cards, that's one use. In the financial markets, we're seeing the most uptake. So 90% of VEN right now is trading in the European Forex markets. And in that world, VEN is really the most stable currency on the planet because it's a diversified basket of other currencies and commodities and carbon. It tends to move less against other currencies. So for corporate netting, you can basically hedge your foreign exchange balances very effectively using VEN. And then really at the sovereign level, we're just looking at ways to eliminate fraud and corruption for aid into places like Africa, where you can basically hold the dollars or the euros in a secure jurisdiction and then issue the corresponding VEN into the market and enable that to transact with a ledger that's visible and transparent. So, $2 billion went missing in Somaliland last year. You can reduce that almost to zero using digital currencies. So that's 3 use cases.
Yeah, from a processor perspective or the traditional payment network perspective, I think the opportunity is relevant to the conversion of the currency into USD, and then the form factor delivery mechanism of a virtual wallet, a physical plastic Visa, MasterCard Discover card, or kind of what Stan touched on is kind of new forms of acceptance at retailers that are accepting the currency. So I think that's how traditional stakeholders kind of fit into the value chain in the future.
So I go to a lot of conferences and I talk about this subject a lot, and probably Bitcoin has been marketed to you all as quote unquote money. And while there certainly may be some truth to that, that's not really the platform that I particularly adhere to. I certainly believe that Bitcoin is a commodity, but I think that really in terms of the most obvious application, it's a payment mechanism. There's no counterparty risk between participants. There is no need for trust, which is really the biggest onus I see here on a lot of the discussions we've talked about thus far. International payments are trivial, and there's no volatility risk. I mean, it's the perfect platform for a payment mechanism. Not only that, it's an open standard. There's no corporate interest that can engage in rent-seeking behavior and otherwise make the currency less efficient. And so I think that really this is the ideal use. You've always seen it with QR codes in use, but the newer versions do support NFC payments. And I think that you will rapidly see that most of your industry quickly adopts this platform as it solves most or all of your problems and lets you do what you do best, which is move money, perhaps, and not necessarily be the gatekeeper between parties. So there's a lot of exciting uses to it, and you can even see some more exotic stuff being done as of late. For those of you who haven't seen, Overstock is going to launch a New York Stock Exchange competitor that is based entirely on the commodity that is Bitcoin. And it's a little complicated and it's a little weird, but if you remember back in the early 90s or so when somebody said, like, what is the internet? And the answer was, oh, it does A, it does B, it does C, it does email, it does information, it replaces newspapers. Bitcoin is a similarly malleable technology. However, it deals with the management of scarce resources, which certainly that's what all of you guys do in the form of money, and that happens to be the lowest hanging fruit, and so that's what you will see, I think, first. But there's a lot more to come from Bitcoin. I would not be very quick to trivialize it or dismiss it because this will be a recurring theme for the next 5 to 20 years, quite easily.
In our case, what we're seeing is, and as Travis mentioned, this is a sim game right now. So there will not be adoption by the consumer if their merchants are not accepting payments. So a lot of the use cases that we're seeing right now, and which are initiatives like a company called BitPay, which is transforming the ecosystem of how to receive payments directly on the Bitcoin rails and not using the Visa MasterCard rails. The other use case that we think is very important, and as Stan mentioned, is having a product that is card-based, that where you will be able to store any sort of digital currency or asset, and you can use it freely either at the supermarket or pay your travel if that's the case. You can't do that right now with Bitcoin freely unless the merchant accepts Bitcoins in an easy way. The exchanges are an important part as well. There are right now a division between what is an exchange and a trading site, where there's either Bitcoins, Vans, et cetera, are being traded. It depends if they're open loop or closed loop. And there are a necessity of where the status of that ecosystem looms. And I think that's a particular use case you'll be seeing over and over again. As Chris mentioned, the news that Overstock is going to create a New York Stock Exchange type of trading for an online retailer was an odd piece of news that came out this morning. But it does show the importance of having a site where you can convert freely from a digital asset to a fiat currency as well.
So when you think of cryptocurrency, but most specifically Bitcoin, a lot of people have a lot of things come to mind. Obviously Silk Road and some of the negative connotations, but at its, at a basic level, Bitcoin means different things to different people depending on how you're utilizing it. And it's, again, this is an evolutionary state of an industry, if you will. So to some extent, it's a payment. It's a way to facilitate payment. Now, Chris had mentioned it creates stability, and then some of you in your mind going, yeah, but it dropped like crazy this weekend. Keep in mind, if a payment function, if this is a process that's going from me to you to make a payment or from entity to entity, it's happening in milliseconds. Fluctuation in a marketplace is really irrelevant when it comes to a payment flow. If you are commoditizing it from an equity standpoint and you're looking to buy and hold strategy, or otherwise kind of notate it as stored value, then it has a different viewpoint, right? Then you might look at something else, or do I want to buy Bitcoin as an equity for growth, or am I looking to stabilize? For example, Vin today works in Argentina a lot because of the economic instability you have in that economy. Then Vin becomes a safe haven, right? So it's just depending on how you look at it, but there's two ends of the spectrum. One is the stored value, which then you hear about the trading desk and the equity trading side of it, because you need to exchange it from what they refer to as a fiat currency, which would be US dollar, euro, et cetera, into that cryptocurrency, which is that exchange. And again, this is an evolution. They become exchanges. Coinbase, wallets, in an essence like that, are also exchanges because they had to facilitate their business model. You have to exchange it from USD into the Bitcoin in that case and then spend. So you'll see as time goes on, you'll see different players become different things because in the beginning it was a necessity for the business model, right? So what I'd like for us to kind of talk about now, because I want to leave plenty of time for questions and answers, is related to kind of future state? Where do we see it going? What's the timeline associated with evolution here? Things seems to be moving very quickly. I remember this time last year, the value was much lower. I actually bought it at $30 at that point in time. It went up to some over almost $1,200 and now dropped back down to $300. So that's a valuation aspect, right? But from an industry growth, from utilization, adoption, where do each of you think where we're going to be 1 year, 3 years, 5 years out, and what's the future of crypto in general?
Well, I can speak on behalf of Venn with regard to that. And one of the things that very much differentiates Venn is that because it's operating with a closed loop, it has a little bit more, I think, room to work with regulators from a kind of negotiation standpoint. We're targeting 1 billion Venn to be exchanged within like the foreseeable future, probably within the next few months. But at large,
Stan, let me ask
see,
you a question. I mean, you mentioned, when you say the $1 billion exchange and in the current exchange you have, what does that mean to a layman?
well, so I mean that means a billion Venn changing hands, which is about $100 million US worth of value, because the exchange rate is around 10 to 1. So we're already at $500 million, and we think that we're very much on track for 1 billion exchanged in the very near future, hopefully by the end of the year. But the big thing that we see is $1 trillion market for digital currency at large. And a lot of that's going to be driven by Internet of Things, which you mentioned. So the key thing to get here is that what these digital currencies are doing is mapping value to the Internet. So you have links and nodes, and these links and nodes really make up what the Internet is. The first wave of that was about communications. The next wave of that is about assigning value to those nodes. So whether you do it with Bitcoin or you do it with Ripple or you do it with Venn, what we're doing is assigning value to lots of points on the web and making them interchangeable. And whether it's Internet of Things or machine-to-machine payments or a bunch of other things that are coming down the pipe, we see that clearly being $1 trillion business by 2020, and it's why Cisco and IBM and other very large companies are working on this. In the correspondent banking world alone, I mean, there's about $1 billion of fees that are extracted each year for correspondent banking. Ripple and Bitcoin bring that almost to zero because they're peer-to-peer networks. So there's a lot of value to be, I think, erased out of the financial market in terms of efficiency, but there's also a lot of value to be created in terms of new ways to interact and basically to build wealth. So I'd say long-term $1 trillion market. Right now we're aiming for $1 billion.
My comments are probably more myopic than maybe my colleagues on the panel. I think that from a traditional stakeholder in the payments network, I'm optimistic anyway that we'll see a financial institution in the prepaid category be willing to kind of embrace a prepaid card where the source of funds are a cryptocurrency and get comfortable around the bank secrecy, KYC issues, source of funds, and I think that's completely possible.
So my one-year prediction is a little bit hard for me because I talk to a lot of companies and I need to keep a lot of business plans secret. But suffice to say, the vendors will outpace consumers. The products and the partners being announced are pretty major. There's a lot of people involved in this that if you are underestimating the size of the movement, you're going to be very surprised. The ETFs will do a lot to stabilize the market and help regulation. For those that don't know, ETFs will be around, I think in November, they're doing not the Winklevoss, the second market ETF, where you can buy Bitcoin on the stock market. I think that'll do a lot to probably even stabilize the price a bit. But that's the one-year trajectory. On the 3-year trajectory, I think you'll see business models that really incorporate micropayments to a significant degree. It's easy to chastise these sub-5 cent transactions is not important, but you all need this on the regular. The easy example would be perhaps you're going to websites that are very spammy. You have to click to continue and maybe watch a stupid ad. Most of you would pay like 2 cents to not have to deal with that, and most websites would be very happy to receive 2 cents a visit. There'll be a lot of business models that take advantage of that, and you can't do that with credit cards, and you'll never be able to do that with credit cards, or at least the legacy systems we have today. Certainly the major adoption will continue, but particularly on the consumer end, there's a lot of stuff that I've been privy to that I think will really help consumer adoption. So I anticipate that to work well. I think that Bitcoin will completely replace credit cards for online purchases. It's absolutely insane that you need 14 pieces of identification just to buy like a digital subscription online. Because all of the trust requirements of the existing system, Bitcoin will succeed in that space. I think there'll be better credit products as well for consumers that utilize the Bitcoin protocols. 5 years out, I think that Bitcoin will be probably the only payment system that is used by international travelers in one sense or another. This sort of currency conversion thing that we do now is a little hokey. And for a lot of people, they want to use their native currency and perhaps transact on the fly. Certainly, credit cards do provide some services here, but I could see more pluggable systems wherein currency conversion systems are perhaps decoupled from your source account and the vendor's destination account. That'll be a sort of commoditized product that'll be very efficient. There will be markets for digital assets. So Bitcoin is the tip of the iceberg, but you will find many commodities traders that are trading things like ad credits and perhaps, tickets to events and all kinds of esoteric digital things. I think that'll be very common. I think existing US-based websites will become significantly larger as they have an international reach. Now that they're able to service these audiences, having a shared currency mechanism. I think, and similarly, I think Chinese websites will be more pervasive in the US. It's very possible that we end up using Baidu here because they don't have to worry about all the encumbrances of accepting payments across those borders. And that's it for now. There's probably more.
That leaves very little for me, but the way we see it is right now, pretty much the discussions where it stands is the conversion of digital assets or cryptocurrencies into fiat, and that's pretty much the state of the union as it is. There's initiatives, as Chris mentioned, that are happening, for example, to transform BTC, the Bitcoins to gold or other sort of commodities as well. We've sat in discussions with large corporations that are considering using Bitcoin or BEN as a trade currency in order to reduce the hedge that they have with the exposure of different currencies and the trade periods that they are exposed to. And the financial services. Part of my background is I've been in the mobile payment space as a technology provider for the last 6 years successfully, and we work with the likes of HSBC, Citibank, very large corporations worldwide. And I always challenge them, telling them that what we were doing in the mobile payment space is literally creating virtual currency as well. It was backed because there were deposits that securing what was the stored value in the card. But at the end of the day, it was a platform that they were creating, a digital currency that the average user on the street perceived as electronic money. So we do see the financial institutions adopting this, seeing tremendous value of taking digital assets or digital currencies as part of their day-to-day retail and consumer transactions. The future is wide open. We will see more things happening. As Chris and Stan mentioned, machine-to-machine transactions and a lot of the Internet of Things will leverage the use of digital currencies instead of using fiat as we know it today, reducing the cost of those transactions dramatically.
So a lot of the comments, when you think about where it's going in the future, if I was sitting in your seat as a processor, as a payments person, even a retailer for the most part, some of the things I would hear in this type of conversation would be threatening to me. And all duly so, because it is a structural change to what we do today. So in an essence, cryptocurrencies is the true form of a disruptor in the payment space. It is actually something that could be more embraced by the omni-channel, by the ISO side, and it is. A lot of things that are going on that the natural media is not aware of, and once it comes out, it'll be too late. So I definitely, and as a payments architect of looking at what things can be, I get excited about it because there's a lot of opportunity. And some of the things when you talk about and we theorize where it can go, it can almost sound like you're in a Matrix movie or something. You know, the Internet of Things. You mean all devices are connected and have a value and they're all associated with me? Is that not net worth? Well, does that mean if I have 3 spoons and you have 1, I'm worth more? You know, I mean, in an essence, that's where it could go. Now, there's a lot of stumbling blocks to getting to a certain point of being completely digitized, if you will, in this world. Is it? realistic? What's the adoption timeframe, regulatory control, all these different factors, right? Something as simple as regulatory control of looking at Bitcoin and having prejudice against a Bitcoin, which is really a form of cash to some extent. And there's different approaches against that type of delivery mechanism that could be considered just a cash exchange. So there's a lot of hurdles. I'll get to you in a second. There are a lot of hurdles that we have to overcome. So with that said, I'd like to open it up for questions. We'll make sure we have some room for questions because we wanted to give enough room. But understanding that there's a lot of, again, elephants in the room I know that we haven't touched with stability and things of that nature, but we can take it offline and also do it to our time constraint.
I'll start. So clearly, with Bitcoin, there's been a lot of press around this idea of actors, and I think it's important to remember that the technology is different from the players in the technology. So in the same way that we have cash and we have bank robbers, and that's very much true with Bitcoin too. You have a technology, which is like the cash, and then you have actors in the economy who may be nefarious. With Ven, it's a little bit different because it runs through a closed loop, and the currency, the IP, and the social network which really supports Ven, which is called Hub Culture, those are both managed by a trust, and there's an IP bank around that, and then the companies that operate in that ecosystem are separate from the trust. So that's one of the things that we did very early on, thinking kind of in the way that a central bank thinks about how we maintain integrity for the currency. And then in terms of the issuance, it's algorithmic. So there's an algorithmic issuance of the currency when a buyer settles into the currency, and then we settle into the underlying assets on the markets in real time. So it has that kind of crypto element in the sense that it's cryptographically locked, and it's also algorithmically locked in terms of the issuance. So there are kind of these set public rules around the currency. We've been able to avoid a lot of the issues around kind of the freewheeling open source world because we've tightly controlled this idea of the loop, and we've been very careful in selecting regulated partners who have been, say, bringing Ven into the markets. And that's the reason why we're the only digital currency trading in regulated Forex markets right now. But we see over time both Ripple and Bitcoin being incredible rails for moving assets, including Ven. And the reality is that the blockchain is truly a transformative technology that is public. So you may not be able to see the kind of name identity of a transaction on the blockchain, but we're actually getting ready to launch audits for our own currency using the blockchain. So we would have a public audit to prove our reserves and to prove the activity happening on our network, but still maintaining control of the currency from a central standpoint.
I think that the concerns are rational and irrational both at the same time. Clearly there are concerns, and they namely focus around source of funds and KYC and know your customer. But you can walk into a check casher here in Chicago and cash a check and then walk back in 5 minutes later as a separate transaction, or do them simultaneously as two transactions and put $1,000 on a prepaid card and kind of off you go. But when you probably what the industry has suffered from this point is the discrimination as kind of banks start to try to understand it is, what was the initial source of funds? How did that $1,000 enter into the ecosystem initially, where that same discrimination isn't transpiring today with cash, and yet that $1,000 was anonymous initially.
So I only have a short answer on this, but in my experience, technology is completely indifferent to sort of the actors in the system, and then that's what we do in politics, is we try to set rules for these things. On the spectrum of problematic, corruptible people, Bitcoin is certainly a little bit below credit cards, but it's certainly way above cash money, and we seem to be doing just fine as a society with cash money. Yes, there's some bad actors, but we've done a really good job of creating rules that, by and large, control the system. And I think that pattern will continue with Bitcoin. And I know that it came from a very shady past, but in a lot of ways, these movements tend to attract a very extremist culture at its root when there's a new philosophy or something that it is in sort of encouraging. And the internet was like that as well. And so I think that it's following the same pattern, and I see very quickly large institutions and mainstream institutions adding the structure that is quite clearly required. I don't think that this technology, the toothpaste will go back in the tube, so to speak. So I think that it is in everyone's interest that we just treat it like that and treat it like we have with any other payment mechanism, and not maybe make such a big deal about it. Let's just do what we usually do.
Henrik, before you get started, there's an interesting statistic Chris made me think about. If you take a look at the evolution and the adoption of the internet and take the evolution and the adoption of Bitcoin currently, it looks exactly the same. And so we have a big bell curve that you start to hit. And so when you look at that adoption and that evolution of how things work, it works exactly the same. So right now it's following the exact track. So the players seem to be similar. The behavior is very similar. If you remember, there used to be an item out for the government was going to tax the fact that you're going to use the internet. And you had to pay to get on the internet and use it. Remember, there was a day and time you had to pay per email. That was something that was floated out to the government at one point, right? So again, it's just an evolutionary stage and just recognizing where we're at. Sorry, go ahead, Andrew.
Yeah, I'm going to be quick. Corruption is a function of transparency and access to information. So as digital currencies and cryptocurrencies evolve as technology, not necessarily as a payment mechanism, you won't be able to avoid people doing illegal trades or selling drugs or guns or what have you and getting paid in gold. That's outside of the control of the system and the technology itself. What you will see is the inclusion of several technologies which are existing to this group here. For example, digital biometrics, the concept of digital persona as a unique way of identifying who's doing the transaction. Some of the things that I've discussed and I've sat with IBM and Cisco is the idea of creating a serialized digital currency embedded into Bitcoin and some other initiatives as well. So there's big players looking at this strongly. And the other thing is the internet is becoming every day more secure and more surveyed by multiple parties. So as these transactions occur within an electronic realm, there will be entities that will be watching for the irregularities in this transaction. So I think that will stop a little bit of the craziness that we had in the early periods.
If I could just add one last thing. Henry just touched on this, but the next really big thing after currency, I think, is going to be digital identity. MIT is about to release some really cool new technology that distributes these basically open source vaults that allow individuals to maintain their own data and their own digital identity over the web. And we're incorporating that into what we're doing with Ben with something called Hub ID. And what Hub ID does is it fulfills the regulatory requirements for identity and identifying information with transactions, but it takes it steps further by allowing the user to put different tabs of data into their profile to create a really kind of unique ID in what we call Aura. And this can then move around the web and become a KYC AML tool for banks and other payment processors to reduce their own risk related to identity on the web. I think that that's going to be a really big area going forward, this idea of distributed digital identity.